This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. Hey team, we have a new sponsor here at the Crypto Conversation, BitGet, one of the world's leading copy trading cryptocurrency exchanges. Yes, indeed. What happens if you've got the funds to invest, but you don't have the time to keep track of the market? You still want to make smart money moves. What do? Well, copy trading is a popular choice for beginner traders. You can shorten your learning curve by uncovering tips and strategies from more experienced traders. BitGet's copy trading platform has over 80,000 elite traders to choose from and 380,000 followers just like yourself who are already using the BitGet copy trading platform as a potential passive income stream. All it takes is one click. You can subscribe to an elite, profitable strategist, set your limits, automate your orders, and monitor their trades. I've got some links in the show notes below. One link will take you through to the BitGet sign-up page, give you a VIP discount. So learn all about it for yourself thanks to BitGet. And now it is on with the show. My guest today is Karlis. Karlis is the founder of Valio, an asset management platform that connects you to leading traders and digital asset managers, on-chain asset management. Very interesting. Welcome to the show, Karlis.
Andy, thank you for having me.
It is a pleasure. Let's do what we do at the beginning of the show, Karlis. It would be fantastic if you could please introduce yourself, just, share a little bit about whatever you're comfortable sharing. Love to hear a little bit about your personal and professional story in terms of what has led you to founding Valio.
Sure, happy to. So educationally, I come from a background of mathematical finance, which I suppose was one of the reasons why crypto and decentralized open ledgers attracted my interest and curiosity in the first place. Now, as far as professionally, the first thing that I ever built was a software development company that did fairly well. That was also my first exit, sold my stake to my co-founder, then spent a bit of time working on perhaps an overly ambitious AI mental health startup. And in 2020, I founded my venture vehicle, Openhedge, with the mission to advance open source finance. And at that time, I didn't have the single thing I wanted to spend the entirety of my time working on. And we were involved in a number of different things. Some of your listeners may be familiar with perhaps premium finance, which is kind of one of the things we've been involved in the most. But more generally, I've been around crypto since 2017. At that time, I wasn't convinced that the infrastructure is going to amount to much as far as providing value to society. But in 2020, that's when the switch really flipped for me. And when it became apparent that this technology is here to stay, and that not only is it here to stay, but it's going to play an increasingly important role in how humans transact and record value. And most recently, as of roughly 9 months ago, we've wound down all of our involvements to focus exclusively on Valio, which is an asset management protocol to onboard the next 1 billion users into crypto. And the reason why we're focusing on it right now is because we need to question more the paradigms in which we onboard new users to our industry, because that's kind of the top of the funnel. I'm happy to expand on this in a second, but we need to do better as an industry.
Yeah, I very much agree. So how long have you guys been building this platform then, Karlis?
Yeah, sure. So we've been building for roughly 9 months now, and most of that initially went into R&D because, again, maybe to kind of zoom out and start with the reason as to why we're doing this in the first place. If you think about what are the main gateways for people into crypto, they are predominantly four of them. One of those being Binance, second being Coinbase. Then in Europe, we have this thing called Revolut, which is, you can think of it as something like a block or, a Cash App, whatever. And the fourth being NFTs. And if you think about what all of these gateways entail, or rather require, is some initial knowledge about the industry and particular assets. So for instance, if you go on an exchange, you create an account, you still are left with the daunting task of knowing what exactly do you buy then, what are the tokens that you want to have exposure to. And we as an industry, we take it for granted. But this is really a prohibitive barrier to entry for most users. And most users do not want to use exchanges. They simply want to have an easy way in which to get smart exposure to the industry. And so this is something that we needed to rework as an industry for a long time. And as a result, we founded Valio because we think there's a better way. And this better way revolves around backing the leading traders and asset managers in a trustless and non-custodial way.
Right. So the idea is people that are potentially interested in, taking some positions in crypto, but they're not perhaps that interested to spend all their time researching different projects or different traders, different types of coins, but instead they can come to Valio and look at the different traders. I think you call them managers, right? Yeah, different managers on the platform, and instead effectively back people that have talent and industry knowledge, and it's a simple solution for them.
Correct. So I'll share a story that is so illustrative of what people undergo million times a year in trying to join crypto. So roughly 2 years ago, I spoke to a friend of mine who's a very smart guy, master's degree in physics, works in IT, all of the prerequisites to understand what's going on. And we had this in-depth, wonderful conversation about distributed ledgers and all of the downstream implications for society and democracy, among other aspects. And he was immediately excited. And he immediately understood the potential of what's going on here. And his first question was, well, Karlis, how do I get exposure to this? Like, how do I get involved? And at that point, I was okay, well, the first step that you probably take is you go on an exchange, you buy some ether, and then you look at the coins that you think are ultimately going to do well. And so what ended up happening is he went on FTX, he bought a bunch of ETH, and then he, spent the majority of his portfolio buying coins that ended up going to zero promptly. But he thought those were, based on his very limited amount of research, those were something worthy of his time and capital. And then FTX rugged him for the rest. And the takeaway here was that even if you have very smart people who are capable of understanding the industry in each of the individual protocols, it doesn't mean they have the time to do it. So we simply needed a better way to make this happen. And the way to do this is to connect these people looking to enter crypto to traders and asset managers who are native to this industry, who know what they're doing. And for the people looking to enter, instead of having to analyze each individual token at length, they can simply look at the track record of the people that they ultimately intend to back.
Yeah, got it. Thank you, Karlis. And, it reminds me, Karlis, you'll be very familiar of, I guess, the kind of the idea that for long-term investors, your average kind of long-term investor who just puts significant amount of capital into the market, it doesn't matter whether we're talking stocks or crypto or ETFs or whatever here, if you have that kind of long enough time horizon, then you're much more likely to outperform day traders who think they can time the market and move in and out of positions all the time, except perhaps for the 1 or 2% of those smart traders, asset managers who actually are good enough to time the market and beat the market, right?
Well, certainly. And to that point, asset managers can have edge in multiple dimensions, timing being just one of those. But the broader thing here, Andy, is that if you think about what happens when people just go on exchanges and buy random tokens as their entry point, what this creates is this weird dynamic where asymmetrical information dominates and is very pervasive. And what do I mean by that? Suppose you're a normie and you just created your account on Binance and you're looking to buy a token. You'll likely buy something that your friend will have told you about or something that you've seen on TikTok. And I know this may sound awful to some people, but this is the reality. And so what you'll end up directing your capital to, most likely, are a bunch of scam coins or a bunch of marketing and meme coins. And as an industry, it's not healthy for us to have these capital flows be diverted into these dead ends. What instead we want to make sure is that the capital entering the space enters in an efficient way that is conducive to the overall growth of our industry. And to your point about the long term, even if someone has a very long-term horizon over which they want to allocate to our sector, it should be guided by someone. People can't be expected to make these long-term allocations for themselves unless they are willing and able to invest hundreds of hours of research into this. And, just as an equivalent example, consider retirement funds. Imagine a world in which retirees would have to day trade and manage their own personal portfolios. That likely wouldn't be conducive to good outcomes, right? But this is effectively what we have in crypto. And until this is abstracted away, we're going to see severe hindrance in the capital coming in.
Yeah, great points. And look, not to go on too much of a tangent here, Karlis, but it always strikes me, this is one of the paradoxes of crypto. And look, there are many, but one of the paradoxes of crypto, of course, is that because the technology is essentially open source, anyone can spin up any kind of new asset, any new chain that they so wish. Anytime, and spin out any kind of meme coin, as you've kind of talked about, and put a little bit of marketing behind it, and times that to infinity. And yeah, it's just one of those crazy paradoxes that we have Bitcoin, and then we have Ethereum, and now we have hundreds of thousands, if not more, potential tokens out there, with many more to come.
That's exactly right. And Andy, what you're describing is actually one of the root causes of the problem, asymmetric information. Because if you look at this from the point of view of an entrant who just wants to allocate some capital to fundamental long-term innovation, they have to scrape through a bunch of noise in understanding what is real and what isn't. And we take it for granted just how daunting of a task that actually is, because to be truly able to analyze the things you get behind, you mostly have to operate at the intersection of finance, technology, game theory, as well as the social context. As again, I don't want to use the word narratives because I think they're a shorter term phenomenon that is bound to disappear, hopefully. But again, the point being, there's a substantial amount of complexity. And so until this is curated by someone at scale, it will be incredibly difficult for new entrants to emerge in the market without them accidentally diverting their capital to scam coins, meme coins, and things of that nature. And this is just something we have to tackle as an industry, because if the average experience of someone getting into Web3 is that they've accidentally purchased the wrong meme coin on an exchange and it went to zero, even though they thought that they were backing fundamental innovation, this isn't a very good outcome.
Yeah, absolutely. Let's bring it back to Valio then. It'd be great if you could just maybe talk us through a little bit about how the platform works. I guess a little bit more in terms of who you're aiming at this, but basically both on the depositor side and on the manager side, maybe some of the different user groups. And then also like to understand, how technical people need to be if we're talking about normies that have no experience in DeFi, and then can they come along and easily engage with Valio?
Sure. So a few things to unpack here, and just to first outline why Valio is different. And to understand that, we have to look at a bit of history of the problem, which has been as old as our industry, which is how do you make smart exposure easily accessible to people? Well, as an industry, we started by thinking, okay, well, the way to do that is clearly index products. You just put together a bunch of tokens in an index and you let people acquire those. They're curated, everything makes sense. Indexes were tried in various shapes and sizes, and neither of them worked. But what we learned as an industry is that the reason they do not work is because things change too quickly. New tokens come up, old tokens kind of fall off the ladder of what's good enough, so to speak. Things change very quickly. And most index products, in fact, all of them, simply haven't been able to capture the dynamism of the industry, so to speak. So once the industry realized that, the next phase of thinking was like, okay, since things change very quickly, what we really want to have is we want to have leading traders and asset managers manage funds on behalf of new users. But who are these top traders and asset managers? And that's where our industry is very different from anything from TradFi, for instance, because most of the top traders and asset managers aren't your typical regulated funds that you can just LP in. And most of them are anonymous or pseudonymous traders and individuals on the internet. So then the question became, how can you let new entrants back these anonymous individuals who you can't obviously know or trust in a way that's safe for the depositors? And so that was the question that led to the first generation of asset management protocol spawning. I don't want to name any names here, but what they all shared was this fatal flaw, which is why none of them really took off in the first place. Because indeed, there were some protocols that enabled trustless asset management, but it came at the price of the asset managers being highly restricted. So for instance, in the previous generation asset management protocols, if I'm a manager, my investable asset universe is first limited to just a single network. So I would have had to choose either Ethereum, Arbitrum, Optimism, Polygon, or whatever. And on this single network, I was just limited to the highly liquid tokens and to synthetic tokens. Again, not to kind of go too technical here, but long story short, the reason why this was the case is because nobody had figured out a way how to prevent managers from counter trading their own positions. So for instance, if I was a nefarious asset manager, what I could do is I could create a private position on a private wallet of mine of some illiquid token. Then I could buy it from the funds that I manage and then unload my private position. And as a result of all of this, asset management never really stood a chance because the managers were extremely constrained in what they could do, and constrained beyond the point of it making sense. They simply weren't able to do a good job. And Valio is the first protocol to overcome both of these technical limitations on a framework level. So what we've managed to achieve is, for the first time ever, in a trustless and non-custodial way, we've been able to give our managers all of the tools that they need to, do what they're good at, which is to manage their portfolios. And this is possible thanks to two core innovations. One of them being that Valio is the first ever shared state omnichain system, which basically means that you have one vault spanning the entirety of networks that we support. So Arbitrum, Optimism, and etc., and Ethereum. And the other thing is a proprietary security framework that we developed, which is a mouthful, but it's actually fairly simple, called the Cumulative Price Impact Tolerance Architecture. And without getting into details as to what exactly this means, the key takeaway is that it allows asset managers to trade long-tail illiquid tokens without them needing to be trusted or manually curated. So effectively, Valio is the first protocol to achieve the 0 to 1 in asset management, where on one hand, you have the backers who can back any trader or asset manager without needing to trust them and without worrying that the manager can run away with their funds. And on the other end, you have the traders and asset managers who have all of the tools that they need in order to perform. And that's something that hasn't been done before. And we've been live in very early beta for slightly over a month now. And the traction that we've been seeing has been tremendously encouraging. In fact, we have more daily active users than some of the multi-billion protocols out there already. But most notably, we've been seeing that the traders and asset managers on Valio are generating returns up to 5 times higher than on the previous generation of asset management protocols, simply because they now have the flexibility that they've always been lacking. So, but to circle back to your question, Valio is extremely simple. The goal of it is to be the simplest way to get intelligent exposure to the Web3 landscape. So any user, we encourage you to give it a go, even while we're still in early beta. We hope you'll find the experience simple and enjoyable.
Yeah, fantastic. Very well said, Karlis. Thank you for that. Learned a lot there. And, I also like the way you see this a lot in DeFi at the moment. And of course, Web3, just kind of like different. I guess the easy way to describe it is gamification. And like one example is, talking about seasons, right? And so I can see that you intend to operate, a kind of seasons model on Valio as well, right?
Correct. So there's actually a double-edged sword here. What we've ended up with as an industry is this Moloch, where any serious go-to-market strategy has to have this gamification element these days, because that's simply, the standard these days. People need to have something to be excited about. But on the founder side, we'd much rather not do that. We'd much rather compete in a playing field where there is no gamification. So the reason, we'd rather do that is because you get better signal about your product market fit. But anyways, kind of being mindful of the reality in which we're in, our approach to go to market has been to introduce gamification in the right and in a way that is sustainable, to truly gamify the core value proposition of Valio, which is that as a backer, you can, instead of spending these hundreds of hours of building your own portfolio, you can find the person to do that for you. And, you learn things along the way, you become more sophisticated. And on the manager side, there are also a set of things we try to gamify and incentivize. But indeed, to make it more exciting, we're doing seasons. We're currently in season 0, which is the very early beta. We're just testing the protocol in a limited way. But for anyone listening, if season 1 is going to be really exciting, even more exciting than the season 0.
And look, I'm sure that for anyone that signs up and gets involved during the beta and they're in season 0, I'm sure there is some reward for that, right?
Correct, Andy. In fact, we've managed to already build a very kind of, loyal and engaged, community. And so what we want to make sure is that all of these early community participants and early users are rewarded generously, because at this stage, they've been tremendously helpful in pointing out to us where the bugs are, what features could be improved, and so forth and so on. We already have an amazing community, and all of whom will be greatly rewarded for the time they spend in the early stages of Valio to help us refine and perfect the product.
And so when do you anticipate full launch? Do you have a kind of like a set date in mind, or is it a moving target and you want to just get the product really, really right first?
Certainly. So in its current state, Valio is live already on all of the networks that we support, on the chain, on Arbitrum, on Ethereum, and on Optimism. The only distinction here is that it's still rough around the edges, in the sense that we don't have yet all of the integrations complete that we want. So for instance, now you can trade perpetuals on Arbitrum. You'll soon be able to trade perpetuals on Optimism. You have spot markets on all of the networks. But again, there's a plethora of things that we're still adding. Options protocols on Arbitrum, notably Premia, lending markets, and a bunch more infrastructure just to help our traders and asset managers succeed. And while we're in this stage of rapid iteration, we've set the vault caps to a very small amount, $10,000 worth per vault, just to make sure we don't have to iterate quickly in a high stakes security environment. But that said, there are still a number of things that we're going to do before season 1 begins, which is really, you can think of as the mainstream push. And those being, first, abstracting away the wallets entirely from the backer experience. Right now, you're able to back traders and asset managers from any crypto wallet that you'd like. But this doesn't have to be like that. It needs to be the case where you can not know anything about what a wallet is. You can simply connect an authentication method you're familiar with, like Google or Apple, connect your credit card, and be able to back traders and asset managers with the same decentralization guarantees and being in custody of your own assets. So that's one of the major user frictions that we're eliminating before the full go live, if you will. And there are a few others. But long story short, we're taking the existing product, we're simplifying and removing a bunch of the end user tractions before we proceed with the mainstream release. And that's scheduled to happen in the next couple of months. Fantastic.
All right. Well, just as we finish up this part of the podcast, then Karlis, just talk us. Can anyone in the world access Valio? Is it restricted to anyone? DeFi regulations. How do you think about all this stuff?
Certainly. So I may have a set of unpopular opinions here. But for one, I welcome the general objectives of regulation. And if you think about what those are, it's enhancing capital formation, it's improving symmetry of information, and just having fair and orderly markets. So in the past couple of years, we've worked extensively with some of the best legal teams in the world to understand exactly how to navigate the space. And generally, we're very supportive of any initiatives, of any regulatory initiatives that are thoughtful and well considered. And even if they aren't, we comply with all of the regulations in all of the jurisdictions in which Valio is open to operate. Now, that said, the jurisdictions in which we do operate is a very changing landscape, and I'd have to get back to you on this before, as to what is the most up to date as established by our legal team. But generally, we do not have a lot of jurisdictional restrictions outside of the, sanctioned countries list that you typically encounter.
Understood. All right. Well, for anyone who is listening and perhaps intrigued, they want to learn more, Karlis, they want to get involved with the beta, they want to access those early rewards, just please tell people what should they do, where should they go?
Absolutely. So definitely go on Valio.xyz. You will also find us on Twitter. Check out our content. But most importantly, just try the product. It's really easy to use. We think so, at least. If it's not, come into Discord and tell us where exactly you had a hard time. And let's just reshape the way in which we do onboarding.
Awesome. I reckon we go do a very quick break, and then we'll come back and we'll have some fun. We'll finish off by running Karlis through the very famous Crypto Conversation Hot Take Round. Back in 1 second.
Look, we'd all like to say we're pro traders, but the reality is we're probably not. But with BitGet, you don't have to be. Why? Because BitGet is the world's largest copy trading exchange. Instead of you muddling through it on your own, feel confident. BitGet allows you to automatically copy trade from over 80,000 elite traders with 24/7 support on our secure copy trading platform. Start following expert traders on bitget.com. Check for details in the show notes and join BitGet today.
All right, we are back, and I'm with Karlis. He is the founder of Valio. an asset management platform that connects users to leading traders and digital asset managers. The platform looks great, actually. It's currently in beta, but yeah, lots to learn, have fun with, and engage with there. Link, of course, is in the show notes. Karlis, I like to finish each podcast with a quick round of rapid-fire crypto conversation hot takes. Are you up for it?
I am most definitely up for it.
Awesome.
Just going to run my morning copies in preparation for this, so I'm ready and eager, Andy.
I like it. Just going to run some questions at you. No right or wrong way to do it. Just want your kind of honest answers, hot take style. Question 1 for you, Karlis. Where would you say that you sit on the Bitcoin maximalist to multi-chain opportunist spectrum?
I do not believe in maximalism in anything. Maximalism to me is a fundamentally flawed concept.
Absolutely. Fair enough. What would you say then is your firmest conviction crypto opinion, Karlis?
So systems tend to, the properties of the systems we want underpinning our society are ones where information is free, where the friction is minimized. And if you think about accounting and transferring value from an information theory point of view, it is obvious that we are, as an industry, heading in the right direction. How long that takes, nobody knows. But my long-term conviction is that 50 years from now, states will no longer be in charge of what we today considered money and ownership transfer.
I like it. So I have in my notes, I was going to ask you 2 questions from now, Karlis. You mentioned in the first part of the show, the downstream implications for society and democracy due to the ever-increasing adoption of distributed ledgers, really. So that's what you're talking about?
Well, yes, correct. If you look at the why of things here, I believe that there's a set of founders coming from backgrounds where either they've personally or they know someone closely who has undergone a freezing of accounts, a loss of assets due to, for a multitude of regulatory reasons, state collapse and so forth and so on. And it is exactly this drive to kind of peacefully rebel against these scenarios that drives the innovation of our industry in the right way.
I like it. All right. Let's bring it back to just maybe perhaps 10 years only into the future, Karlis. Bill Gates famously said that we tend to overestimate what we can accomplish in 2 years, but underestimate what we can accomplish in 10. So, with that in mind, anything you like, but Valio, I guess DeFi, Web3, what does it look like in 10 years' time?
So my great hope for 10 years downstream is not so much on the technological front, it's more so on the regulatory front. Right now, one of the largest bottlenecks to value creation in crypto is linking the real world to the on-chain world. And that effectively requires a set of regulatory frameworks, ideally globally adopted, that establishes a possibility that you can canonically represent an asset on chain. That is to say, if I take, let's say, a car and represent it on chain, that is the canonical proof of ownership, not a wrapper around the traditional kind of documentation system you would have when buying a car. So we've been at it since 2017-18, largely, when people first started looking into tokenization of real assets. And there are countries in the world that have made significant advances, at the helm of this being Switzerland. But my hope for the next 10 years is that this truly progresses globally and we are able to establish canonical proofs of ownership on chain.
Nicely said, Karlis. All right, the flip side of this, of course, is a quote by sci-fi author William Gibson, who said that the future is already here, it's just not evenly distributed. With that in mind, Karlis, can you think of an example of the future being here right now, but most people aren't aware of it?
Well, I think it goes back to the example Elon once mentioned in an interview, where the topology of technological awareness is mostly flat, but there are some really kind of high spires in kind of this space. But honestly, for anyone working in tech, I think it's mind-blowing to just see and feel the rate of advancements and change. For instance, we tend to not spend a lot of time reflecting on these things. But if you now look at something like GPT, in how that helps work on daily tasks, improve efficiency here and there, it's really mind-blowing when you think about it. And we are so used to getting new apps, new user experiences, etc., that we don't have enough time to contemplate what they really are and what they really mean, and just how mind-blowing they are. So this awareness is something that I would think comes slowly at first, and then all of a sudden. And for some of us who have not yet come to this realization that indeed we are in the future in every sense of the word, that realization is going to hit them in the face, whether they like it or not.
I couldn't agree more. Wonderfully said, Karlis. All right, time to get weird just for a second. If we zoom out, what do you see as the long-term future for the human race? Do you see dystopia or utopia?
Wow, that's a good one. So I know that when you ask a bunch of prominent thinkers as to kind of what they deem the most significant factors dictating the kind of outcome we'll get as a civilization over the next hundreds of years, they mostly name things like becoming multi-planetary, space-bearing, and clean energy, so forth and so on. I'll take a slightly different view. I think one of the key contributing factors to that is going to be how the social fabric continues to shape. Over the past 10, 20, 30 years, what we don't talk about enough is the exponentially growing complexity in everyday lives. We're no longer in the world where our only source of information is the TV and your kind of regular programming. People have these constant short-term bursts of information that they are exposed to, and complexity is everywhere, which again, we could expand on this in depth for quite a while. But what this has led to is diminished attention spans, diminished depth of thought, and a bunch of other adverse consequences. As a result of which, I'm more concerned than I've ever been about the ability of our social fabric to exist in cohesion, where people are able to think, people are able to react, people are able to discern reality from what isn't reality. And so I'm just incredibly hopeful that we are able to get on top of this, because that's certainly a prerequisite for achieving the utopian outcomes. Because if people cannot focus on things for more than a couple of seconds at a time, and they can be easily manipulated by what are already fairly well-known ways of stimuli through notifications, through other kind of short-term rewards, then we're definitely not on track for a great future. But my hope is that we can get on top of that and truly experience a technology-fueled utopian outcome.
I hope so too. And it brings us nicely really to the final question, Karlis, which is, what is your favorite science fiction book, film, or TV show?
Well, there's probably a recency bias here, but I'd say Dune. That was a great read.
Yeah, great read. Of course, good film as well. I think the second Dune film is coming very soon this year anyway. Yeah. Hey, this has been excellent talking to you today, Karlis. Thank you so much for spending some time with us and coming on the show. Been intriguing to learn more about the vision that you have for Valio. Close it out really by just telling people, of course, where they can go to engage with Valio, get involved with the beta, earn those early rewards. but also please feel free to shout out your Twitter profile as well.
Thank you, Andy. So for anyone curious to learn more, head over to Valio.xyz and check out the product for yourselves. If for some reason you want to find me on Twitter, you can find me at @PandaJacketGuy. There is a story to this username. I'll just disclaim that. And you can learn more there. Andy, overall, this was really fun. Thank you for having me.
Awesome. Thank you so much, Karlis. All the best, and bye for now.